Could an Iran-Israel war trigger a global economic recession? In 2025, tensions between Iran and Israel continue to escalate. If these tensions erupt into a full-scale war, the consequences would not be limited to the Middle East. It could significantly disrupt the global economy. This article analyzes the potential impact from three key perspectives: energy markets, global supply chains, and investor confidence. 1. Energy market volatility, risk of skyrocketing oil prices. Iran is a major oil exporter, and the Strait of Hormuz, through which nearly 20% of the world's oil passes, is a critical choke point. If the conflict spreads to this area, oil prices could soar beyond $150, 0 cents per barrel. Such a spike would drive up transportation and production costs worldwide, especially for energy importing nations like Germany, Japan, and India, potentially triggering widespread cost-push inflation. 2. Disruption of global supply chains. Impact on Asia and Europe. While Israel is not a manufacturing powerhouse, its tech and defense industries are deeply integrated into global high-tech supply chains. Iran is also involved in infrastructure projects linked to China and Russia. A war would likely halt or disrupt these collaborations. Additionally, overland trade routes connecting Asia and Europe, such as those through Central Asia, could be affected, tightening global supply chains already under strain. 3. Erosion of investor confidence. Flight to safe haven assets. Geopolitical instability breeds uncertainty. Global markets could see sharp declines as investors flee to safe havens like gold, the US dollar, and treasury bonds. Emerging markets would be particularly vulnerable, with capital flight exacerbating existing financial fragilities and potentially triggering localized crises. While a war between Iran and Israel may not immediately cause a global recession, if the conflict escalates and becomes prolonged, it could tip an already fragile global economy into contraction. With high inflation, rising debt levels, and slowing growth already in play, such a war could be the catalyst for a wider downturn. Diplomatic intervention is urgently needed to prevent a deeper crisis with worldwide repercussions.